So what do you do when your forbearance ends on your mortgage? The CARES Act offered much needed mortgage relief for U.S. homeowners under this act. If you have any mortgage backed by the federal government, including conventional, FHA, VA, and USDA loans, you can pause your mortgage payments for up to 6 months with no penalties. Millions of homeowners opted in for the CARES Act mortgage forbearance in March and April in 2020 when the economy took its first hard hit. To date, the majority of homeowners who opted for mortgage relief are actually still in their forbearance plans because they were allowed to request an additional 6-month extension. That's if it was still needed. That means that homeowners were provided with a total of 1 year of payments in forbearance. These are ones they didn't have to make. So what are you supposed to do if your forbearance plan is ending? If you have exhausted all of your extensions at the end of your forbearance, this means that you are supposed to now pay all the payments that you didn't make at one time. Well, remember, forbearance is not loan forgiveness. So borrowers will still owe the principal and interest that they did not pay during the forbearance period. And if you don't work something out with your lender, then you will face foreclosure. So you need to make sure that you get something worked out to work something out with the lender. But typically you're going to have a few options. So this is what they are. Number 1, full repayment, which is a one-time lump sum payment. It's possible to just pay back all of the missed payments at once, but lenders are not allowed to require this. So you can do it, but you don't have to. The second option is intermittent payments, where you arrange a repayment plan with your servicer over 3, 6, 9, or 12 months, whichever one makes the most sense. On top of your regular payments though, so this will be in addition every month to what you normally pay. Number 3, lengthen your long-term loan and pay off the missed amount of the plan on the extended loan term with additional mortgage payments. Number 4, you can defer your payment. This option lets you pay off the missed amount at the time the house is sold, refinanced, or the mortgage term ends. Number 5, pursue a loan modification. This helps borrowers who were at risk of default change their mortgage terms, and usually this is going to include a lower interest rate, reduced length of the loan, or even reduced monthly payments. The right option for you though is going to depend on your current finances. So not everybody is going to be able to get a modification. You're going to have to be employed and have the ability to repay. When your loan servicer contacts you, be sure to discuss every option in detail so you know exactly what to expect with the repayment plan that you select. Borrowers should expect very long delays and may experience inconsistency in customer support, because loan servicing organizations are not at all properly staffed for what the expected volume is going to be for forbearances. And they cannot train support people fast enough to meet their needs. We saw the same thing happen back in 2008 and 2009 with the mortgage crash and loan modifications. It was a hot mess. With the pandemic, all businesses are facing challenges, so you have to be prepared for process changes. As regulators react to the crisis in real time and create new rules or modify existing rules, this is a day-by-day process, so you're going to have to be patient and know that it really is not a conspiracy against you and it's not personal, but the lenders are just a mess with everyone trying to call in and take care of this. So you really need to keep a close eye on your credit report and your score. Also, if your mortgage has been in forbearance, check your credit report very, very carefully, because CARES Act states that mortgages in forbearance should not be reported as having late or missed payments. So check your credit report. And the forbearance plan should not harm your credit score. So just check. But there is another area where mistakes can happen. So so just be very, very diligent. Remember that lenders and servicers have never before had to deal with a mortgage forbearance on this scale. This is all new. So it is up to you, the borrower, to be extra vigilant, and make sure nothing slips through the cracks. Check your loan statements every month. Don't just throw them away. And stay on top of your credit report. Sign up for something like Credit Karma. And if you still can't afford your mortgage payments after the forbearance, well, the very, very worst case scenario is forbearance ends and you still cannot afford to make your monthly mortgage. So what do? Well, if none of these repayment options or loan modification options are doable, then you do need to look at selling your house and downsizing to something that you can afford. Good news is right now, the real estate market is still very hot for sellers, but in a few months that really may not be the case. And so don't let your home go into foreclosure. Contact a realtor so that you can at least sell your home and take the equity to put it into something that's going to be more affordable. What if your mortgage company refuses to work with you or they offer you a repayment plan that is not feasible? Well, the good news is you don't have to lose your home. As bankruptcy attorneys, we can write a Chapter 13 plan and take the amount that you've not paid to date, put it into a 3 to 5 year repayment plan. During this repayment term, the lender will not be able to foreclose on you. As long as you keep making your normal monthly payments after you file your bankruptcy and you continue to make your Chapter 13 payments. Wherever you're at in this process though, just make sure you're not sticking your head in the sand and waiting till the last minute to resolve your problems, because that's going to be painful. You need to get on this now. Now is the time that you need to be reaching out to your lender to see what your options are. Because if you've been in a forbearance, it's not going to last forever. So be proactive. Take a look at our description below. We've got some really useful links and some additional information about forbearance and the options that we've talked about in the video. If you've got any questions about bankruptcy, anything to do with foreclosure, forbearance here in Georgia, feel free to reach out. My information is below, and I'm always happy to answer questions.